Calculation of commission to manager on profits. Dear students, today let us learn about how to calculate the commission to manager on profits. The calculation of commission to manager presents some difficulty to students when the payment is based on percentage of the trading profits after the deduction of the actual commission payable to the manager. In such a case, the percentage of commission and the figure of trading profits prior to charging commission having been given, the working will be as under. Illustration. X, the manager of Sharp and Slow, is to receive 10% of net profits of the business left after the deduction of his commission. The profit prior to deduction of commission amounted to 33,000 rupees. What commission does X stand to get? Solution. Assume that the commission of X is rupees 10 and the profits left after deduction of such commission are 100. Then the profits prior to commission should be 110 rupees. Therefore, the commission is equal to 33,000 divided by 110 into 10 is equal to 3,000 rupees. Thus, the commission in this case works out at 1/11th on 33,000. It will be 3,000 rupees. Let us check our answer by the following example. Profit before commission at 110% is 33,000. Less commission at 10% is 3,000. Profits after deduction of commission is 30,000, which is equal to 100%. 10% after charging commission on 30,000 is equal to 10%, 3,000 rupees. In the next lecture, we will solve an illustration on final accounts, trading and profit and loss account, and balance sheet along with passing adjustment entries needed.